What's good, everybody? Welcome back to another breakdown video. So in today's video, we're going to be breaking down EURUSD shorts that we took. The reason why I called out that trade. So now we're currently on the 4-hour time frame. If you watched the last breakdown, you'll notice that we've been anticipating sells here on EURUSD because we are in a bearish market. Price has been selling back to back, so it's only right we keep looking for sells. So when it comes to this particular position that we took here, if we go to the daily time frame, we'll notice that we had a level of support here which price broke aggressively and retested. As you can see here, this daily candlestick touched it and rejected. So on seeing that this daily candlestick closed below support, breaking it, I was anticipating sales. And if you look closely also on the 4-hour time frame, it's the same thing. We have this support here, which price later came and turned it into a level of resistance. So on seeing that, I drew my Fibonacci golden zone to see where price is aligning, and I noticed that price was also rejecting the 38.2 or the 0.382 of our Fibonacci. So I was looking for sales. So on seeing that price has gotten to our resistance level, also noticing that price had a break of structure here on the 15-minute time frame. Price formed a lower low, consolidated lower high around here, double top, but failed to create another lower low here, but instead broke structure to the upside, creating a higher high, came back to retest a higher low, broke back up again, higher high, higher low. But when price got here, I noticed something here on the RSI, because I'm only looking for sales due to where price is currently at daily and the 4-hour level of resistance. So there's no need for me to start looking for buys until price breaks this level here, this level of resistance. Then that will not be a confirmation for me that okay, the trend has changed. Or if probably price does something like this, forming a double bottom, then break structure, then I'll start looking for buys. But let's so I'm still looking for sales. So knowing that price is at that level of resistance, I was looking for sales here on the 15-minute time frame. On the RSI, I noticed that we had a bearish divergence. Here on the RSI, you notice price here formed a double top. Price here formed a double top. But when you look at the candlestick, when you follow the same line, notice that here price formed a higher high. So that there is a bearish divergence. So I was looking for sale. I was expecting price to give me an entry signal, which it did, which was this bearish engulfing candlestick. On seeing that price has closed a bearish engulfing candlestick, I called out the trade here, executed with stops above that resistance level. But also notice another thing, which was the reason why we took our second entry, and that was on the 5-minute time frame. On the 5-minute time frame, I noticed a pattern. I noticed a chart pattern that price gave us here. Left shoulder, head, right shoulder, broke the neckline. Can you see how clean that is? Broke the neckline, retested, came back just to form a double top and melted. So you see, I was using the higher time frame as a confluence. I'm just looking at the smaller time frame for my entry signals, but overall the higher time frame is what I use for my direction. So that was when I drew my fib from this point, the right shoulder, to where price started to pull back after breaking that neckline of the head and shoulders pattern, executed somewhere there with same stop loss, overall with a 2% risk, 1% on each. Targeted this level of resistance, this level of support for my take profit, this level here, and price smashed that take profit. And now this is what I did. Let's say this here is the 4-hour time frame and price is trending downwards. Price has broken this level of support and now it's starting to pull back, and now price is currently at this level of support. So I'm waiting to see if price will respect that support and turn it into a level of resistance. So here is the 4-hour time frame. On seeing that price has approached this level here, what I'll do now is go to my smaller time frame and wait for either double top or a head and shoulder. Now for double top, I'll wait for something like this because this here is a higher high, higher low. Then I'll now wait for price to come to this resistance level, form a double top. Once I see that price has gotten to that level, I will now start waiting for a bearish engulfing candlestick. Once price gives me a bearish engulfing candlestick, I'm executing with stop loss above. Then I now aim for that 4-hour lower low for my TP. That's for the double top. I'll wait for price to break the neckline, come back for a retest. That's why I don't always like move my stop loss to break even very early, because I'll be expecting a pullback. Price has broken the neckline, is most likely going to give us a pullback. So on the pullback, what I do is use my Fibonacci from the swing high to the swing low, where price started to pull back. I like using limit orders. So in a situation like this, I'll use a sell limit order with stop loss above resistance with the same target as the first entry. With the first entry, so what price will now do is price will just come up, trigger my position, and continue melting. So that's how I always have two positions running on the same sell entry. So now for head and shoulder pattern, what I look out for is something like this. Once I see something like that, I'll be anticipating or expecting something like this, a head and shoulder pattern. Left shoulder, we have the head here, anticipating a right shoulder. So what I'll be looking out for here is a bearish engulfing candlestick. Bearish engulfing candlestick. So once price gives me that entry signal, what I'll do is execute with stop loss above the shoulders. With stop loss above. My target will now be the 4-hour support. So you see, that's for the first position on seeing that head and shoulder pattern. What I'll now wait for next is for price to break the neckline of that head and shoulder pattern. We have a neckline here. What I'll wait for is for price to break, retest the neckline. Once price comes to that level, I'll use my Fibonacci use the limit order with stop loss this time around. It's either I keep it here or adjust the stop loss with the way I use my Fibonacci. Then same target as the first entry. So that's the way I use, or that's how I look for entries. Once price gets to a 4-hour/daily level of support or resistance, I'll go to the smaller time frame and look for these chart patterns. And if it's for a bullish market, it will be an inverted head and shoulder or a double bottom. So that's what I look out for when it comes to following the trend and all that good stuff. And all this was called out live, as you can see. Head and shoulders, neckline break and retest.